Hey, good afternoon, risk managers. Dan Sugar with TrendlineBreak.com. Here's my fifth installment on trend following and trading strategy and trading methodology. Today, we're going to cover three major applications for using trend lines. Okay, number one, you want to identify the trend, identify the macro trend, higher time frame. I'm on an NVIDIA chart daily right here. And again, you want to do your best to trade with the trend, right? So we want to establish the trend here. This is going back a couple of years, late 2020 and 2021. And again, folks, the strict definition of an uptrend is just higher highs and higher lows on a bar chart, candlestick chart, what have you, HL and HH, higher lows and higher highs. So I've identified my higher highs and my higher lows here, right? If you put in a swing low or a pivot low and you bounce, and you come back and retrace, but you make a higher low, there's a higher low, then you bounce nicely. This made a higher high. That high is higher than that high, right? And we pull back nicely from 163 to 135 or so, $30 a share, but we make a higher low. So that's the confirmation on a trend is three touches. So once you get that third higher low, we have an uptrend. Don't wait for the fourth touch. The third touch is the signal. So you want to go long NVIDIA right in here between 135 and 137. Your sell stop for risk goes below $1.52, $2.50. Depending on the trend line, you want to go about an NVIDIA $100 stock at this point, 140. I'd go probably $1.25, $1.50 below the trend line. But your upside is $4.50, $5 or more, right? So there's the higher low. Go long. You can buy some call options or other bullish option strategies. If you want to be more conservative and wait for a trendline break to the upside, there you go. If you want, or you can buy some on the third touch here, and then good traders know when to add on to their positions. You would buy more once we got above 144, 143.75 here. We got above a downtrend line, right? So go long here in the third touch. You identified the macro trend, go long. And if you want to be more aggressive, you can add to your winners. You're already up, $11, $12 a share here. You can buy more call options or bullish option strategies or more NVIDIA stock when we clear the downtrend line. Okay, so there's one really good example. Establish the macro trend. Here's one more. We have we rallied nicely. We have a pivot low. We make a low here. We pop up, double top. We didn't make a new high yet. We come back down, make a higher low. Now we did make a higher high, and then there's your third higher low. So if you missed this one, you could have got long in here around 197, 198 with a 195.50 stop. And again, if you want to be more conservative and go long above a downtrend line, you can do that as well. Okay, or buy more. Go long here, stop below, and then you can add on to your winner right here. It took a couple days, but then this thing launched from 200 to 320 very quickly. Okay, so that's the first reason to implement and apply trend lines in a bull market. Okay, and you can also go to a weekly chart, folks. Go to a weekly chart, and here's my same annotations here. Three touches on an uptrend line, higher highs and higher lows. We got above a downtrend line. If you missed it, here's the third touch on the second one we talked about. And then you could have joined NVIDIA a couple of years ago, and now here we are currently hanging between 400 and 500. So that's the first one, to locate favorable opportunities during an existing uptrend that has three touches. And the same thing goes for a downtrend or a bear market. You have lower highs and lower lows. Okay. The second one would be to help recognize when the current trend is ending and a new opposite trend might be forming. Trend line break, right? So again, here's NVIDIA. We have higher highs and higher lows. Markets don't go in straight lines. So when you do have a pullback or retracement back down, once we get above a short-term downtrend line, all that means is the macro investors and hedge funds and institutions that recognize the higher time frame trend is bullish. When price gets above a short-term downtrend line, couple days or a couple weeks, the bulls are reinforcing their strength. The smart money, the trend line traders that know how to use trend line breaks to initiate positions or add on to their existing positions get long. So you also look for the trend line breaks. When does that trend line break and reverse and go in the opposite direction? And again, you got to learn more about them. I can't just do it in a 4 or 5 minute video, but again, I've found nothing else that generates more low risk, above average reward, above average probability trades than trend lines and trend following. Let me show you Netflix real quick. The last one, the last reason we use trend lines is to lock in profits on existing trades, right? If you're long Netflix for a year and a half or 3 years or 5 years as an investor, it would have been terrible to be long at 60 or 80 or $90 a share and then watch it go to 700 and not take some profits along the way. So you could draw trend lines on your higher time frame charts, and you would bail out of your Netflix investment, 565, 570. You're out. You didn't sell the exact high at 68 or 700, but you didn't wait for it to go to 160 or 160 it went to. So you're out at 560, drawing a trend line to get out. You put a sell stop in there. If it keeps going up, great, you're long. But if it reverses sharply and breaks that trend line, you want to get out. And then you can also reverse and buy some puts or get short if it's a trend line break after something that's really frothy and had a 3 or 5 year move like Netflix did a few years ago. All right, so there's some of the applications. Number one, joining an existing trend. After you identify it, do we have higher highs and higher lows? Buy a pullback to that third touch, sell stop goes below. The second application is trend line breaks. When you get a violation of a trend line, you can reverse your position or put a new position on in the new direction. And the third application is to lock in profits on existing trades. I did this one on Netflix on a weekly, but if you're on a 5-minute S&P chart and you're long and you break a trend line on a 5-minute chart, you can also lock in profits. So again, you can apply it to all trading styles and all trading assets. Thanks, folks. We went a little bit longer on this one, a minute and a half longer, but look for my next one. My next series is going to be, so this wraps up the 5 videos on trading method. The next 5 are going to be on risk management and position sizing. Say hello, Bear. Where's my burning doodle? Here he is, buddy. Hey, bud. Come on in the picture, buddy. All right, folks. Hope you enjoyed it, and talk to you soon.